Hello, everyone, and welcome into CrushTheStreet.com. I got a very important interview and update for everyone today. We've heard people describe this virus as the pin to the bubble. Understood and point well taken, but this is more than just a pin. Air traffic is down 90%. We have, 2 billion people around the world plus in some form of quarantine. The U.S. has expanded social distancing practices until April 30th. The Olympics are postponed. Schools are closed for the year. And now we're on the verge of the most expensive central bank and government response to an economic crisis the world has ever seen. So I'd want everyone to visit crushthestreet.com/virus and crushthestreet.com/gold for very important reports regarding this. You're going to really enjoy that. But without any further ado, we have Jim Rogers on the line, legendary investor, someone who co-founded the Quantum Fund and retired at age 37. He's an author of several books and is also a financial commentator worldwide. He's based in Singapore. Rogers is the chairman of Rogers Holdings and Beeline Interest, Inc. Jim Rogers is on the line with us today, returning guest. Thank you, Jim, for coming on the show with me.
I am delighted to be here, Kenneth. I'm glad we both survived so far.
Well, I must say that what we are seeing globally feels almost like a movie. In fact, we have both Mercy-class hospital naval ships in Los Angeles and New York. This really does feel like a war. With everything I said in the intro, what are your initial thoughts on this current pandemic crisis?
Well, there's no question that there is a virus out there somewhere, and anybody who gets it doesn't like it, especially if you die, and many people have died, so it can be horrible. On the other hand, I would point out to you that 40,000 people die every year in America from the flu. So it's not as though this is some kind of nightmare we haven't seen before. We've seen this and worse. In Asia, they seem to have gotten it much better under control than we have in the US or in Europe. So it looks as though it's going to pass someday, maybe even sooner than we expect. And if so, I guess we're all going to survive. I hope so.
So what does it say with all of these businesses that are living hand to mouth, people living hand to mouth globally that cannot withstand a closure of a few weeks, a couple months, without having the mother of all bailouts or a collapse situation?
Well, Kenneth, I would also quickly point out that the cure can be worse than the disease. You know, in the U.S., I'm an American citizen and voter like you are, and most of your viewers. You know, in America, we are spending staggering amounts of money and printing huge amounts of money. The politicians all want to be elected, and the election's in November, so they don't really care too much about the long term. They just want to get through November. Well, unfortunately, you and I and my children are going to live a lot longer than that. And this is not going to leave the world in great shape down the road. And not just the U.S., some of the European countries, the Japanese, oh my gosh, the Japanese is just as bad. So some people in the end are probably going to be worse off. We don't want anybody to fail or lose everything. On the other hand, we do have to worry about, have to worry about the long term.
Absolutely. And there really is an issue with these bailouts. Governments are attempting to create wealth through these handouts, but at the same time shut down global productivity. And when you have this flood of new currency hitting the system without any productivity being created, what does that ultimately do to the system?
Well, if all you had to do was print money, there'd be a lot of countries that'd be rich right now. Many people have tried this in the past. Unfortunately, it doesn't work in the long term. You're exactly right. You have to build up productivity. You have to build up investment, and sending out a lot of checks. I mean, by heaven, yes, send me one too. Send us all checks. But in the end, you have to do a lot more than that if you want to build the competitiveness of an economy and the productivity of an economy. As I said, November is only 6 or 7 months away. These guys only care about November. They don't care about 2030.
So where does this inflation, this monetary printing surface, does it ultimately go back into the stock market? I mean, we're seeing stocks collapse. But where does the fallout, the printing of this money ultimately enter the system? Is it in precious metals? Is it in hard assets? Is it in real estate? Where does this flow?
Well, ultimately, it will probably end up in some kind of asset. You're exactly right. Yes, we're all going to spend, or people are going to get the $1,000, are going to spend it, undoubtedly, and that's going to be useful for some people. But in the end, this is not building new factories. It's not building new roads. It's not building new schools or productive assets, competitive assets, I should say. So in the end, historically, it's wound up leading to more inflation. At the moment, the price of oil has collapsed for many reasons. And since oil is the main ingredient in inflation, it's holding inflation down, and we all think everything is okay. And maybe oil is going to stay at $20 a barrel, but I would suspect not, and that in the end, prices are going to go higher again.
We have quite the situation happening in precious metals. Physical is very hard to come by. You have a lot of delays right now. The bullion dealers I speak to, everyone's out or, very, very backlogged on their orders. U.S. mints around the world, they're either shut down or delayed as well. Mines are shutting down globally because of the virus. What sort of recipe is taking place in precious metals at the moment? And does it have you bullish on gold and silver?
Well, I own gold and silver. I've been buying gold again since last summer. I didn't buy gold or silver for several years, but now I certainly am buying gold and silver again. Historically, when things like this happen and people lose confidence in money and in governments, they buy gold and silver. Many academics who will tell them they shouldn't. Well, who cares? Who cares what academics and bureaucrats say? All of us peasants believe in gold and silver. We know that for thousands of years, gold and silver have saved us. So all of us peasants are going to be buying gold. Throughout centuries, most people, all of us peasants anyway, have known that gold and silver holds its value eventually. Academics and bureaucrats may say, don't buy gold, don't buy silver. Let them say it. Okay, I'm a peasant. I'm a peasant like many other peasants, and I understand that gold and silver will be fine in the end.
Is there any sort of upside that you see in gold and silver that you're looking for, or just holding it as insurance in these volatile times? And what is your expectation for gold and silver in this environment?
First of all, everybody should own some gold and silver as an insurance policy, if nothing else. We all have fire insurance. We hope we never use our fire insurance. We hope we never, ever use it. But if we need our fire insurance, we're glad I have it. So that's what people should look at gold and silver. Now, if you get the timing right, you can make a lot of money in gold and silver as well. Gold went down, has been going down since 2011, but now it's probably going to go up again, if you ask me. So you can make a lot of money in gold and silver if you make the timing. But again, everybody should own some as an insurance policy, if nothing else. And it may be that the timing is about to be right again. What you should do is ask Kenneth at Crush the Street about the timing, but you should own some no matter what.
Jim, what is your expectation and your sentiment towards the U.S. dollar? Obviously, getting a lot of traction right now in this crashing market environment. World reserve currency at the moment. The big dog on the block, whatnot. What are your thoughts on the U.S. dollar at the moment, especially with all of this printing that is going on? I mean, where is this fallout going to ultimately hit?
I own stacks of U.S. dollars, not because the U.S. dollar is a sound currency. In fact, the U.S. is the largest debtor nation in the history of the world. So it is fundamentally very, very unsound and getting worse every day. But Kenneth, for whenever there's turmoil, people look for a safe haven. And for historic reasons, many people think of the US dollar as a safe haven. So I own a lot of it. During this turmoil, depending on how bad it gets, the dollar's going to go up a lot. It's going to get overpriced. It might even turn into a bubble. I hope it doesn't turn into a bubble, because if it does, I have to sell my dollars. You always have to sell a bubble. So I own it now because people are afraid of everything else. But if you look at the competitors, I mean, the Bank of Japan, the guy goes there every morning and cranks up the printing presses and prints as much as he can. He said his quote is, "We will print unlimited amounts of money." In Europe, they're doing, England, everywhere, every country in the world, even developing economies now are printing a lot of money. So the US dollar, while it is terribly, terribly unsound, in people's minds, it's a safe place to be. So I own a lot too.
Jim, getting close to the end of this interview, I have two more questions to ask you. I want to ask you about the U.S. stock market. You talked about selling bubbles. Obviously, we've seen it correct quite a bit, lost trillions of dollars in terms of market cap. Is it still a bubble? Do you think that this grind that we're seeing in the economy is going to continue to put downward pressure on global stocks, U.S. stocks in this environment?
Yeah, it wasn't just the U.S. market that went down a lot. Markets all over the world totally collapsed. I don't know any market that didn't collapse. So yes, the U.S. Now the U.S. was at its all-time high, and the U.S. was probably the worst bubble. The 3 months before January, it went straight up. It was amazing how much it shot up there for a while. It's been over 10 years since we've had a bear market in the U.S. So for many reasons, it was time for a bear market. It's the longest bull market we've had in American history. So yes, a very overpriced, lots of exuberance and confidence. So it was time for a bear market. Whenever there's a bear market, there's always a reason. And in this case, the one that's in the press anyway is the virus. And the virus is certainly now having a huge effect on world economies. But it's all markets that are collapsing, Kenneth, not just the U.S. And I would suspect that we're overdue for a rally. It looks like we're having a nice rally. Normally, after you have a panic and a total collapse, things stop and rally for a while. Looks like that's happening.
Is this a dead cat bounce, false rally in your opinion, or are we going into a 1930s style long depression bear market?
Watch Crush the Street, Kenneth. What's wrong with you? Aren't you listening? If you ask me, it's going to be the worst in my lifetime. And I know I'm older than you. In 2008, we had a serious problem around the world in financial markets because of too much debt. Kenneth, since then, debt everywhere has gone up by huge amounts. In the U.S., we're going up over $1 trillion a year. And everywhere else is doing the same. So we're going to have the worst bear market in my lifetime. I would suspect, and I'm not very good at market timing, I would suspect we're going to have a very nice rally now. Politicians all over the world are doing everything they can to get through the next elections. So I'm sure we'll have a nice rally. We had terrible despondency, terrible negativity. There's something called the VIX, which went to the highest level in recorded history, which showed huge pessimism. So I suspect we're going to have a nice rally. After the rally, we'll see. A few months down the road, I would expect the bear market to continue, to resume, I should say.
Jim, I'd be remiss not to ask you about China in this environment. How large of a setback is this coronavirus going to be on the Chinese economy? I know you're very bullish when it comes to Asia. What are your thoughts on China and the exposures of the economic vulnerabilities that this virus is having globally, as you pointed out?
Well, it hit China first. China was surprised. They didn't know it was coming. Nobody knew it was coming. It's embarrassing to me as an American. In America, we had 3 months notice it was coming, and we were totally unprepared. Well, the Asians weren't prepared because they didn't know it was coming. But we had 3 months notice, and even 2 weeks ago, we still didn't have test kits. We didn't have anything. We didn't have respirators, despite 3 months' notice. So the Asians seem to have done a better job of containing it. Korea, Singapore, where I live, Taiwan, some countries have done, if you read the press, a much better job. China seems to have gotten this thing under control after a month or two. It's not great, but still it's better than what's happening in the U.S., where we're still floundering around wondering what are we going to do next. So I would suspect that this is being better contained in Asia, and China's already started opening restaurants and factories again, as have many other places. So it seems that Asia has done a better job. But so what? Their biggest customers are the U.S. and Europe. Europe and the U.S. are just now closing down and just now being effective. So it doesn't matter if you're in good shape. If your customers are not in good shape, you're going to suffer too. So while Asia seems to have done a better job now, despite being shocked and surprised, the rest of the world, the largest economy in the world is Europe. The second largest, the U.S. So you have to worry about those guys more than the small countries.
Well, you heard it, everyone, from the man himself. He said, listen to Crush the Street. Jim Rogers, thank you so much for coming on the show with me today and sharing your wisdom with us. If people want to learn more about you and the work that you put out, please let them know a little bit more about where they can go and what they can expect to find.
Well, I don't have anything to sell, Ken. It's always fun to talk to you. Thank you.
Appreciate your time, sir.